Salute guys. After the latest drop of more than 35%, Bitcoin is showing a decent reaction if we're talking about a potential continuation of the uptrend. Today I'll show you how I'm planning to trade the common Bitcoin moves and what kind of setups we can take from this market. On a weekly chart, Bitcoin has come into a previous mark imbalance zone, and already now we see something that looks like a buyer's reaction. Because it's not enough just to come back into an imbalance area, you also want to see the right kind of reaction from buyers. Price touched the 79,000 level, and this now trading around the first Fibonacci target at 91.5 thousand. As Bitcoin was falling, it created several new imbalances, but this time in a downward direction. And as we know, price tends to come back into key inefficiency zones. The Fear and Greed Index is sitting at 23, which is actually partially paradoxical, because at this reading, the asset is trading around the $1,000 area. That definitely creates a potential impression regarding the potential for further Bitcoin growth. It's hard to argue that there is a real fear in the market right now. Over the last 3 days, Bitcoin has received fresh liquidity through inflows into spot Bitcoin ETFs. After a long period of non-stop outflows, this looks like the beginning of something more positive. Over the last 24 hours, about 100 million in longs and 88 million in shorts have been liquidated. This is pretty standard behavior when, after reaching the first significant resistance zone on an asset, we see roughly equal liquidations on both sides. Things don't look as optimistic on liquidation map. The main cluster of stop losses is sitting just below 19,000, and down to 85,000 the total liquidation volume reaches around $8 billion. And as you know, when it comes to liquidation pools about $5 billion, they rarely stay untouched and unswept. Also, there is a small liquidity cluster around 93k area, so of course we'll break down a scenario where we first sweep the 93k region and then correct down into the 95,000 area. On a daily time frame, you can see how as price was grinding up into its all-time high, it formed a pocket of trend liquidity. This is a natural situation for Bitcoin, but in this case the pain was amplified by the fact that this trend liquidity pocket was forming on a higher time frame, which usually means that when it finally breaks, the drop will hurt my man. And that's exactly what we saw. All the imbalances from the start of this uptrend back in April have been filled, and now we've seen the first reaction from buyers after a move down of more than 35%. According to the VRVP volume indicator, we see that the first significant high volume price area is around 96,000. Before price returns there, I would really like to see a scenario where we first sweep the liquidity around 92,000, then collect the stop losses down at 95,000, and only after that see confident recovery with proper large green candles. I also allow for a scenario where we just form a local range here, and the boundaries of the range between 85,000 and 93,000 would be totally fine for me. In that case, you can simply try to trade both directions within the range. I'm not yet talking about a clean breakout of the $1,000 level, but on the chart you can see that I've marked the nearest significant highs. To sum it up, the most suitable and comfortable scenario for me is to focus on local trades with clear stop losses and defined level of risk. Anything that involves trading without stops, I just skip. So thank you guys for watching. Don't forget to drop your like, to drop your comment. It's important to me. So see you.